fucked, and basically you owe more taxes at the end of every year with DeFi than you'll actually get out of it. So hopefully they don't do it that way. But I'll explain to you, Jeff, why that is, how it works.
That's cool.
But ultimately, in everything right now, the easiest way to handle it is, say it's a business, you're running a business, and that you're getting income from it. And if you don't have a job, you have to understand the IRS will treat the business as your business, meaning 100% of what you make, the profits, will be taxed at 15.3%, self-employment tax first, and then you'll pay your income tax on after that.
Right, which is why I think so agreeing that Taylor and I are a bit apart on this right now, as I need to learn more about what he's talking about, and I think I want to point out the research I've shown him. What it looks like is, because there's not specific crypto rules currently, or in a significant way, the IRS is defaulting to treating it like property, which is why this is. So in a sense, every single time you're if you think like a house, if you're renting out, if you have an Airbnb, and you might change your rates through the year, right, or what you rent it for per night. But if you have 50 different people that book your house at different rates, that's 50 different little instances of income that's based on whatever that cash flow was, right? And on the flip side, if you sell the house and buy a house, well, with crypto, you've got people renting 24/7 and buying and selling 24/7. So it's just a tremendous amount. It's luckily it's all automated, but it is still very onerous. But the other thing I wanted to point out is, if I were going to do a business, I would think you actually set it up as a C-Corp and not an LLC, because a C-Corp pays 21% in tax, but it only pays 21% flat tax on what your profit is. So what you could choose to do is pay yourself a salary at the end of the, once a year, right? You don't have to do it monthly. Get to the very end of the year and pay yourself your annual salary, and you pay that out, and then that's going to be taxed to you as W-2 income, but you wouldn't be double taxed. Right, and you would avoid all of the hiccups in between. So I think,
better idea. That's why you're the financial advisor.
So I think it's how you do it. But again, I gotta do more research.
So. Well, and I'll tell you what most of the the crypto tax, well, I don't no quotes, the crypto tax experts that I've listened to say that the best rule of thumb right now is capital gains, short-term and long-term capital gains on your crypto is the way it should be treated.
Not counting DeFi, absolutely.
Yeah. So that's my closing thoughts on the tax part. We will do another deep dive on this and get it a little more structured and prepared, because I really do want to give people a way to